Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, Apple set to be the first big tech group to face charges under EU digital law, as well as that Toyota makes big bet on small engines in new hybrid era, as well as that world's biggest copper miner insists it can reverse production slump. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Apple. Now, Apple is set to be charged by the EU for apparently stifling competition on its own iOS App Store. This marks the first time that such regulators in the EU have used new digital rules to target the so-called big tech group. Now, of course, this is something that we've kind of noted before, or kind of hinted towards as the EU, and even across the pond with the US, as both kind of groups have started to kind of attack the big tech group. And this is to be kind of understood under the premise of being anti-competition, so them kind of going after these big tech groups under the kind of guise of there being an anti-competition kind of movement and that kind of thing by these big tech groups to wipe out the competition, keep this kind of monopoly within key tech spaces. And the likes of the Biden administration especially have really harped on about the issues to do with the kind of big tech group and the power that they do of course hold with regards to the kind of internet age that we live in, the social media age that we live in. And so as a result of that, we know that the likes of Google, Meta, and other groups have been attacked basically by key legislation, the Department of Justice and that kind of thing, because of the kind of anti-competition moves that we have seen already take place within the industry. And this is something that's of course kind of been actually amplified within the EU, within the kind of Eurozone, as ultimately the EU have taken a really hardline approach with regards to the kind of anti-competition space with big tech groups. And Apple is now seemingly set to be the first of this kind of big tech group to be charged by this new EU digital law. And we know that different nations around the world are introducing their own new digital laws just because of the kind of digital age that we do live in. And so one thing that this topic does kind of hint towards is this being repeated elsewhere across the globe. And I think it's always important to note when we do see a large kind of group like Apple being targeted, and what that might mean, what that might set as a precedent across the world, especially with the US, as I already said, increasing their investigations onto the big tech group, but also with other areas such as Britain or other areas of the world, even South America, Asia, that kind of thing. So definitely this is an important topic to kind of note, and it'll be interesting to see what does come of it. Though it is important to obviously, kind of go into the details, understand what's going on, as whilst we have previously noted this kind of case, I think it's important to then, go over the details once more to make sure that we all understand what's going on. Now, what this kind of case and investigation and charges now kind of to do with is Apple's iOS App Store, as this is something that I'm sure anyone that has an iPhone is well aware of and has used many times, as ultimately this is the primary way, if not the only way, and that's kind of what this case is about. It is the only way for iOS users, people using their iPhone, to download apps, download games, and download anything that they really need on their phone that isn't already there, placed on their phone by Apple when they pick it up from the store. And ultimately, the EU has noticed that this is a key issue, as Apple not only controls a significant part of the market share when it comes to smartphones, but now also is controlling the entirety of the distribution competition of apps on their phones. So you have a large part of the market which just aren't able to be advertised and offer their services through Apple, as ultimately they would be paying or losing out on money if they do then go through the kind of Apple Store iOS system. And that's kind of what the EU is now looking at and saying, this is unfair, this needs to be fixed. And why this is kind of unique to Apple is, of course, I think those that own an Android phone of some sort also understand that there just isn't this same monopoly that Apple do hold over users when it comes to app stores, and it's a lot easier for Android users to download apps from third-party sources. Now, Apple has previously noted that the reason why they don't offer these same services when it comes to allowing for competition when it comes to app stores and that kind of thing is because apparently it's a security issue. Of course, that's somewhat true when you think about the fact that Apple is verifying, of course, the downloads, what's in the downloads, when it comes to what's on the App Store. But then again, the EU is saying this is just simply an excuse for wanting to gain revenue, take profit from app developers when you're really not providing much but the distribution sense of having iPhones and that kind of thing. So it's an interesting case and something that, of course, has affected Apple's stock already. But as this does progress, I think it's something that will go on to affect Apple's stock even more as investors start to then further consider the way this could affect, not only Apple elsewhere, but also other big tech groups and that kind of thing. So definitely keep this case on your mind, with the EU determining that Apple is ultimately not complying with obligations to allow app developers, to advertise offers outside its app store without such developers receiving serious fees. The legislation the charges are being brought under is the Digital Markets Act, which is called a landmark piece of legislation according to the FT, and is designed to force powerful tech giants to open up their businesses to competition inside the EU. The same arm of the EU which is now charging Apple for anti-competition actions is also investigating Alphabet and Meta as a result of the powers granted through the Digital Markets Act. According to the FT's sources, an announcement regarding the charges is expected to come over coming weeks, and an important note is that regulators have only made preliminary findings, and Apple could still technically take actions to correct their practices and thus lead regulators to reassess their final decision on charges. We are now waiting to see if the EU announces charges on other big tech groups, and that's the kind of key thing to note there, is how this might start to affect other key tech companies within the big tech group. So lots to think about there, but we spoke about that article for quite some time. Next article to talk about, though, is to do with Toyota, and we're kind of revisiting this topic that we've once noted before, with the chair of Toyota at the start of this year telling production crews to go out and produce better internal combustion engines. This comes as other car makers, especially those in China, are driving forward in an effort to produce battery-powered vehicles at a greater and greater rate. Now, this is, of course, a topic that we're always talking about now, which is, the topic of EVs and the automotive industry, as, Toyota, Tesla, and other kind of Chinese car manufacturers have really been on the tip of our tongues recently, as all these kind of car makers have gone head to head in a bid to kind of expand their market share or establish a market share within the EV space. And we know that the likes of Tesla have really battled it out now in China, which is the second largest market in the world for EVs. Tesla's massively battled it out and, pushed for kind of greater access to use their services in China to kind of beat this growing competition, which is existing within China and growing within China. And we know even that the EU and the US have implemented their new tariffs on imports of Chinese EVs and that kind of thing, just because the competition is so great, and the subsidies that these companies are being accused of getting from the Chinese government is creating this kind of unfair production where, you know, these Chinese EV makers are just producing an extreme amount of EVs at a very low cost, and as a result flooding the market. Now, why this is kind of interesting and how this relates to Toyota is Toyota's taking a very different approach to this kind of EV revolution that's seemingly been happening. And instead of Toyota investing, you know, as much as other car makers have into EVs and basically solely focusing their future like Tesla is with EVs, Toyota has kind of kept you know, their options open and kind of realized that maybe the switch over to EVs isn't going to be as simple as we think, nor is it going to be as fast as we think. And as a result, maybe there's a larger market for hybrids than full-on EVs. And as a result of that, Toyota recently came out with their new investment and new production of small engines which kind of fit into this kind of hybrid car kind of system, which, you know, allow for greater fuel efficiency and you know, create this market or add to the market which is growing for hybrids, with Toyota changing the game through their recently developed generation of smaller engines which have a unique design in using shorter pistons for fuel efficiency increases. The engines are also unique in that they can run on both diesel and petrol, as well as carbon neutral fuels such as hydrogen. This all represents Toyota's continued investment into the profitable fuel-based technology, which is seemingly more and more profitable as consumers continue to choose hybrids over fully electric vehicles due to cost and range concerns. And that does seem to be the key issue which is facing you know, the EV scene, and definitely with the growing competition and the international issues which are arising, it'll be very interesting to see how things do play out. That's all to talk about in this article. Last article to talk about is to do with the copper industry and the world's biggest copper miner. Now, the world's biggest copper miner, Codelco, has now insisted that they will reverse their severe production slump which has taken place over the course of this year. This comes as a part of their wider struggle to clear their $20 billion debt pile which is facing the company, with the production at the company plunging to its lowest level in 25 years recently, going from 1.618 million tons, in 2022 in 2021 to 1.325 million in 2023. Pardon me with that kind of grammar. Now, the company ultimately faces massive delays on 4 major projects which are required to extend the life of its aging mines. The new CEO Alvaro has told the FT, however, that 2023 was the year the company bottomed out and things were on the up and up from here. Ultimately, the falling production at Codelco has coincided with a series of supply problems for other copper mines, just as demand for copper is surging. The reason why copper demand is surging is simply because it's a key component in power grids, wind turbines, and also electric vehicles, with its price recently hitting highs of $11,000 and it also being expected to reach $15,000 in the next few years. So a very interesting note there on the copper industry, as of course we cover commodities on this channel. It's a very important kind of financial product and sector to look at, with, you know, always opportunities arising. And this is kind of a very interesting topic because we don't of course talk about copper just as much, but it's a very important metal to kind of think about. That's all to talk about on the articles though. Next to talk about, like always, is the charts, which we'll actually have to get through a bit quicker, but that's fine because we don't actually have as much going on this week, it does seem, on the charts. Apart from that though, as I said earlier, we'll come to the economic calendar at the end where we've got some very important data to cover. Now, to begin with, like always, we're on the US 30, talking more broadly about US indices, but as I just referenced, you know, there isn't too much to note for the US 30 at the moment. Price did range over the course of last week and not as much happened as we kind of expected because we were receiving some very important economic data, but that didn't end up affecting the US 30 just as much as we might usually expect. Interestingly, on other US indices that the assets ended off, or the indices, pardon me, ended off the week positive. However, as we can see on the US 30, things did not end positively, and price did kind of trend to the downside as we did end off last week, dipping just below this key area of liquidity, which price had kind of stayed above ever since the 4th of June, pardon me. So a significant thing to note there for where price could stay at for the US 30, and it does bring into question whether price will now continue this move to the downside, depending on, of course, what we do hear from the US this week, which isn't as numerous as what we're hearing from Europe, but still very important to note nonetheless. That's all to talk about on the US 30 though. Next to talk about is the dollar, if we can load it up, which has broke above this key area of liquidity, key area of resistance, which price of course reacted to in a very significant fashion back on the 11th of June, not too long ago, where price did sell off in a very significant fashion, falling all the way to the downside, dipping to nearly the bottom, the very bottom of this range, falling minus 1.15%. So a very significant move taking place after price interacted with that level. But since then, price has made its way back up to the upside, and the dollar's broken above this key area of resistance and liquidity, representing this kind of more dovish picture from the Fed, which is seemingly how the markets have now interpreted the situation within the Fed, about interest rate decisions and that kind of thing. So an interesting position is certainly to note for the dollar. Now, because price is now above that key liquidity zone, if price is to stay within this range, the kind of top of the range, the next area which price could interact with is kind of up and around this higher area of liquidity at the top, and at the top of those previous highs. So a very large kind of gap now is in the market, which price has yet to kind of interact with since the 1st of May. So it'll be interesting to see how the dollar does move this week, as it's whether price can stay above this area of liquidity or whether we'll return back below this key area to start off the week. Next to talk about though is Euro USD, and that's because we do have a great deal of Eurozone data coming out this week, with the Eurozone inflation rate figure and German economic sentiment figure coming out this week towards the start of the week. So certainly some big moves will be taking place on Euro USD as a result of that. Now, interestingly, price did end off the week spiking, or nearly spiking, into this key area of liquidity on the downside. Arguably, it did make its way into it, just depending on whether this was slippage and that kind of thing. But definitely, some key moves have taken place recently for Euro USD as it did end off the week, with price kind of after price did interact with that 6180 in key liquidity zone last week on Wednesday. Price did trend to the downside and shoot to the downside, to be fair, and then claim that kind of Fibonacci extension level to the downside of minus 27.2% Fibonacci level. So a key move to the downside there, and it will be interesting to see how price now does move over the coming week, whether price will now return back into these higher levels, or will price kind of come back and tap this previous area of liquidity and support, but now act as an area of resistance for price, so that price can continue lower maybe. So definitely keep your eyes on Euro USD. Next talk about is pound yen, with the markets receiving a great deal of not only pound but also yen data this week, with the Bank of England's interest rate decision taking place, as well as the British inflation rate figure and Japanese inflation rate figure. So two very important inflation rate figures, and of course the Bank of England's interest rate decision. So it seems like pound yen will be extremely volatile this week, and we did end off last week with price breaking above those all-time high levels and pushing to levels as high as 201.54. So very key moves taking place on pound yen at the moment, but as you can see, price is very choppy still, and the volatility is making these levels act quite weird. So it's kind of hard to make these decisions over where price might interact with, where price will sell off from, buy from, that kind of thing. So definitely keep your eyes on pound yen as things do heat up. Next to talk about though is Bitcoin, which did kind of drop off to the downside, ending off last week or over the weekend, as price dipped below this key liquidity zone, this key area, this key bottom of the price around the kind of $66,000 a Bitcoin level, 66,500, with price actually over the weekend reaching as low as $65,000 a Bitcoin exactly. So a very significant move to the downside there for Bitcoin over the weekend. And the question will be whether price can get back above this key area of liquidity, this key bottom, and stay above there throughout the entire week to represent that strength that's needed. Next to talk about though is gold. Which has kind of returned to the upside, returned back above this area of liquidity ending off last week. But still, it's kind of hard to judge where price is currently sitting just because of this ranging motion that price is currently in, where price is ranging but not kind of in between, you know, these key liquidity zones that we might usually expect price to react with. Arguably, this is a kind of key area of liquidity to the downside that we probably should have had noted out before. But nonetheless, you know, interesting moves being made as price moves back to the upside. Next to talk about though is oil, or lastly to talk about is oil, which consolidated to end off the week at those kind of higher levels around the $83 a barrel level. So a very key level for oil, and it'll be interesting to see whether price can stay around those levels or higher as we enter the new week. That's all to talk about on the charts though. Lastly to talk about is the economic calendar. We're receiving lots of very important data, so I'll get through it quickly. Firstly, we're getting the Aussie interest rate decision, as well as the Eurozone inflation rate figure and the German economic sentiment figure. Followed by that, we're receiving the US retail sales figure and the British inflation rate figure, as well as the Bank of England's interest rate decision, and also the US building permits figure. Followed by that, we're receiving the Japanese inflation rate figure and the German manufacturing figure. So some very, very important economic data points being released this week. But we've covered lots in the articles, lots on the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.